In response to a partial mobilization announced by Moscow, the European Union has promised to clinch a political agreement in no time that would impose a price cap on Russian oil. Although Western states have already introduced such a measure, it has not borne fruit, judging by preliminary estimates. So, investors now fear that fresh sanctions will be much tougher and will target third countries that continue to buy Russian crude and even increase their purchases. All this adds uncertainty in the market. Against this background, oil prices have dropped below $90 per barrel. At the same time, this increases the risk of oil shortages already in the medium term. This means that the quotes will most likely edge higher as soon as the market gets over the initial shock. Brent crude oil futures have been trading in a range between 88.50 and 93.50 since the beginning of the trading week. This sideways movement suggests an accumulation process, which may eventually lead to a new wave of speculation. And in this case, the best tactic is to wait for a breakout of one or another boundary of the range with its confirmation on the 4-hour chart. Short positions will be relevant if the price fixes below $88.50 per barrel on the 4-hour chart, and that's exactly what we are currently witnessing. Long positions can be considered in the case the price consolidates above the level of $93.50. Likewise, gold continues to move in the range of 1,660 to $1,680 per troy ounce. However, regular interest rates hikes by major central banks is increasingly putting pressure on the metal, so the asset is expected to remain stable until the next meeting of European Central Bank policymakers and the release of a new forecast regarding further rate increases. Therefore, the outlook for gold is rather gloomy. There is a likelihood that the yellow metal will fix below $1,600 per troy ounce by the end of the year. In the meantime, gold futures have been drifting within the sideways range, limited by the levels of $1,655 and $1,680 for the 6th trading day in a row. The downtrend will resume after the price dips below $1,655 per troy ounce. Yesterday, the Ministry of Finance in Russian Federation revealed some details on the foreign exchange interventions. The government agency said that it would fully resume interventions only by 2025. And this means that the Ministry of Finance will continue to carry out FX interventions, but with extremely modest volumes. This will not have a severe impact on the ruble, which is quite expensive for the current economic situation. Against this background, the dollar has fallen below 60 rubles per dollar and is currently trying to fix below 58 rubles. If the Ministry of Finance and the Bank of Russia do not change their plans, the quotes will most likely return to the area of 50 rubles per dollar in the near future. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.